Hi, this is Mark with ReadyToBuyHomes.org. We hope that you enjoy this video series and that it brings good content and good information to you in order to make a decision if you're facing foreclosure. So please sit back, enjoy, and if you do have questions at any time, you can email us at info@readytobuyhomes.org. We'll see you soon. So here are the topics covered. What is a deficiency in a short sale? What is a 1099? Number 3, why should I speak with my CPA? Number 4, what are the additional consequences of a short sale? And 5, our next video series in this e-course. So what is the deficiency? A deficiency judgment is when the lender has the right to pursue a summary judgment for the deficiency amount. And so what really is the deficiency? Well, this is the difference between the amount that is owed on a mortgage note compared to what the property sold for in a short sale. So let's take a look at an example here to explain the deficiency a little further. In our example, we've got a $300,000 mortgage, and then let's say we get an approval from the lender of $215,000. When you look at the difference there, we have a deficiency amount of $85,000, and the lender does have the right to pursue the seller for this amount. So what is the likelihood of this really happening? And basically you have to go through the process to see what the lender will approve, and you will only find this out when you go through that process. There's no way to know upfront what type of deficiency that you're looking at, and no one can tell you what will happen until your lender approves the short sale or when the lender reports the short sale to the IRS. So because of that situation, we always recommend speaking to your CPA on how this will personally affect you. Each case is different, and really each real estate transaction is different, so the only person that can tell you how a short sale will affect you is a competent CPA that truly understands real estate short sales. Now you can always go to the IRS directly, and you can read their publication 4681 at this URL shown here. We recommend just getting more information and more information, because short sales will always be the last resort. So what is a 1099? If a lender agrees to a short sale, the lender may possess the right to issue a 1099 for the shorted difference due to the provision in the IRS tax code about debt forgiveness. You can refer to the Mortgage Forgiveness Debt Relief Act of 2007 for more information. And like I said, getting more information is better than not having enough information, because a short sale should always be the last resort. It's always recommended to seek a competent real estate attorney and a tax accountant to determine the amount, if any, of the short sale tax consequences to you. So a little bit more on tax consequences and how this is going to affect you possibly is a short sale may actually give you a blemished credit record, and a short sale will show a pre-foreclosure and the redemption status. Depending on your lender, it may or may not have the same impact compared to a foreclosure. It really comes down to the way that they actually report it on your credit. Typical short sales may affect credit for up to 2 years, while a foreclosure 5 to 7 years. And both having a bankruptcy and a foreclosure would be even longer. So what about consulting your CPA? It's always in your best interest to get more information than what you really need. So talking to a CPA would probably be the best thing for you to do for your own situation. If your lender will not work with you to complete a loan modification or other option, your only option left is a short sale, and you will need to complete the short sale over a foreclosure. And at least you'll understand how it may affect your financial situation by talking to your CPA. So what's better, a foreclosure or a short sale? Both a short sale and a foreclosure hurt but a short sale may be better. And you can get more information directly from the IRS at the link below. So what about filing a bankruptcy, or you're thinking about filing in bankruptcy? Well, you need to understand just a few things here. Make sure that you understand that, you know, if you include your real property into a bankruptcy, there's only one way for the lender, actually two ways that they can get it out of bankruptcy. When you file a bankruptcy, of course, you've got the automatic stay, which stops the foreclosure. But in order for the lender to proceed with the foreclosure, they need to take it out of the bankruptcy by filing a relief of stay. So if you filed a bankruptcy and the lender is going to foreclose, might that be something that could even hurt your credit more than what you intended? So understand Chapter 7, Chapter 13, and how a lender can legally reclaim the property that was rolled into the bankruptcy. So if you are thinking of filing a bankruptcy, or you're currently in a bankruptcy, or you know of friends that may have filed for bankruptcy and they've got real property included within the bankruptcy, most attorneys, just know that most attorneys understand how to relieve the debt, but most may not understand the real estate processes and may suggest that you don't worry about the property at all once you've filed your bankruptcy. One thing that you just want to understand is that the bank still has to reclaim the right or entitle to a property that's, you know, either in your name or in bankruptcy, and so they still need to go through the foreclosure process. In my humble opinion, even if you're in bankruptcy, you still may want to do a short sale just so you don't have a foreclosure on your credit along with a bankruptcy on your credit profile. And here's one of our favorite slides on how to stop a foreclosure. Simply following the steps below by taking action. Find out what options make sense for you. Seek counsel from an attorney or CPA. You can call us Ready to Buy Homes, and then we will talk directly to your bank, make an offer, and find an end buyer, and save your credit from a foreclosure. There's no cost or obligation to you, and in some cases we may be able to keep you in your home. It really just depends on the negotiation with the lender. And we also have ways that we can give you a cash reward in some cities for allowing us to help you where others can't. So if you again have questions or comments, you can certainly get a hold of us by contacting us at 720-207-6421 or at ready2buyhomes.org/blog. Okay, so stay tuned for video number 3 called What Are the Advantages of Doing a Short Sale? Until next time, this is Mark with Ready to Buy Homes. I look forward to speaking with you again soon. Have a wonderful day.